Hi everyone, my name is Simon Mashevich. I'm going to be talking about the US housing market, and this is an update for March 2024. And let me just start by saying there is a lot of YouTube videos talking about a house price crash, and it's not just in the future, but it's happening right now. I think we just need to stop and pause for a second and just look at the data to see if that's true. Because there is a lot of scaremongering at the minute in terms of house pricing crashing through the floor, but there's evidence to support the counter argument that house prices in the United States are going up, and I'm going to show you why. If you're looking for any calculators, whether it's for US or UK, feel free to hop over to our website, grab that QR code and save some tax by using our calculators. So the first thing is US residential home markets. I look at Zillow and Redfin. This is both for February 2024 data. And we've got no monthly change, but year-on-year change, which is where I like to focus anyway, is looking at house price of 349,216 for Zillow, up 4.2% based on their data set. And then we have Redfin that has an improved price of 412,778, which is a year-on change of plus 6.6%. Where's the crash? Right there. Where is the crash? And I know someone will say straight away, yeah, but that's out of date. We've got some numbers coming in to say contrary to that. There is no evidence out there to support that argument, by the way. So it's just a lot of air, I would have to say. Hot air, as we say in the UK. So going to the median sales price, according to Redfin, look at that line going up. Again, we're saying it's now 6%, 6-7%. That is not a crash. And I have to say that the percentage median price is going up, not down. It's not even leveling off. This thing is going up. So this thing about this property price, house price crash, I can't see it at all. Based on the two bits of information we shared. Median days on the market. Lots of people saying that inventory is stacking up. Not true. The black line is showing you that the inventory line is still below, well, it's just above 62 days. That's not a lot, I have to say. And yes, there's times when, actually we could sell a house within 30 days. Well, that was when it was a buoyant market. Of course, you're going to sell a lot quicker. But that's 62 days. If you look across all those years, that's no different. In fact, that's much better than 2020, 2019, 2018, 2017. So again, I don't see this huge inventory stacking up, causing us big headaches, if I'm totally honest. Again, there is a lot of speculation. There's opinion, but not much data being shared. New listings, I mean, there are new listings coming onto the market. We're pushing up now as we're getting to 2024, but that is a lower number than it has been across all the other remaining years. In fact, the only year it was better was around 2012. There was a dip, of course, in March 2020 when it all went bust. But, compare it to every other year, then that new listings is still lower than it has been. So again, is there a justification to say that inventory is high? No, there isn't. Core Logic, and I like to share with you an awful lot more data analysis so you can go out and check your own information out, by the way. Now, Core Logic is saying everything is red heat map apart from Texas and in Northwest, of course. But if you look at the east side of the place, Florida, New York, Washington, all those areas are really hot right now. And even California isn't too cold either. So realistically, we are looking at a good property market. There doesn't look like there's going to be any slowdown according to the data that we have available to us. Core Logic is saying that forecast is year on year is going to be 2.6%. They're not seeing a property crash. I'm not seeing a property crash. YouTube love bad news. And lots of people creating videos to say there's a property crash because they know they're going to get hit. People are scared. But I want to give you balance. I want to give you reassurance that the property price is not going to be affected in the near future based on the information we have. Sellers cutting their price. Now this is from Reventure app, really good use of a source of information again. They have suggested something which I thought was worth noting. Sellers cutting their asking price, with 19.6% of sellers reducing their price on their listings of last month. Now that clearly is going to have an impact on people's house prices and what they sell for. This is a normally high figure for this time of year and is significantly higher than the level of price cuts we saw in the depths of the pandemic in 21-22. So this is now contradicting everything I've just said, but it's only one data matrix. Yes, people are dropping house prices, but we have to remember house prices have been going insanely high in the recent months. So the fact that the people are dropping their prices by 19.6%, yeah, maybe, but how much money have they still made based on the last 3-4 years? It's probably a lot more than 19.6%, if I'm totally honest with you. So again, I'm not too concerned about seeing this number, not right now. And obviously this is another matrix of sellers in Florida. People in Florida are cutting their prices. It says here 28.7%. At the bottom it says sellers in Florida cut their price of highest rate for any February going back to 2017, which is the Reventure app source. Now again, my point about Florida is that Florida has seen a significant price increase. So I'm not surprised to see something counterbalancing, but that's not to say that this is a real major issue. It's just a small correction, if I'm totally honest with you. I don't think we need to overreact. Fed rates, the only bother I have is the Fed rate. Of course, the Fed is trying to control things with inflation. The Fed rate is 5.25%. I can't see that changing anytime soon, but you know, unlike the United Kingdom, where you have to change your mortgage after 2, 3, 4, 5 years, in the US, you don't need to do that. You could stay on a product for 30 years and be quite happy. Thank you ever so much. So if you don't need to sell your property and you are on a good rate of interest, then don't sell. So just to go on to a different mortgage, which is going to cost you an absolute fortune. Stay where you are, wait for the interest rates to come down. Mortgage delinquency. Now, another area which I am slightly concerned about is the Consumer Financial Protection Bureau, the CFPB, which is showing the mortgage delinquency. And that's now picking up. So it was below 1%. Now it's going up towards a 1.5%. But to be honest, again, people will highlight this. They will take this graph. They'll look at this data set from 2020 or 2021 and then just carve that information out so it looks much worse on their YouTube videos. But I want to give you a comparison to what it was in 2008 when it was 4%, 2014 when it was 2.5%. The mortgage delinquency is not significant. Yes, it's gone up. Don't be fooled though by YouTubers or the media saying this is a catastrophic issue. It is if you look at it in isolation of the 12 months, but again, relax. I'm not saying this is good news. I'm just saying it's been a lot worse. So again, it's just a different view of where the delinquencies are coming from. Not so much on the West Coast, but a little bit more on the South and the East Coast where delinquencies are occurring most.